Good morning, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video. Today's date is Monday, May 20th, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. I hope you had a good weekend. Let's get started. I'm going to start by looking at the 4-hour chart of the euro versus US dollar, and you can see that this swing area up through here did a good job of holding resistance and trading here today. This level is defined by different levels going back in time. In trading last week, admittedly, the price did move above the high of the swing area at 1.0887, but quickly rotated back to the downside and then started to use that level, the low of the swing area as resistance into the weekend. We did rally back up toward the low of the swing area on Friday, and in trading here today, the price did move into that yellow area before rotating back to the downside. We are trading to new session lows here in the US session, and if I go to the hourly chart, you can see where we run into on the decline today, and you can see that this blue line represents the 100-hour moving average, and that level currently comes in at 1.0854. And you can see the price moved just a little bit below that level, but just above it right now at 1.08858. The price on Friday came down to that 100-hour moving average and also found support buyers. That also happened to be the 61.8% retracement of the move down from going back to, I think, the March high down to the low that we saw in April. So that level had two reasons to hold support. Today we only have one, the 100-hour moving average, but the 100-hour moving average held on Friday. It held again today. So we'll see if that level does hold, but it's going to be the key barometer for both buyers and sellers today. If the price were to move back below that 100-hour moving average, guess where we go? We go and test the 61.8% retracement. So sellers are making a play here after testing the swing area, but we have support down below, which may stall the fall. We will see, but key level to start the U.S. trading session. Let's take a look at the dollar versus yen next, and this is the hourly chart. And you can see this is also moving to the upside. That was despite a survey from the Bank of Japan today that said wage costs are moving higher. They're concerned about the lower yen. It's inflation. So inflation is on the verge, or it seems that way, as it raises prices. But despite that, we're seeing the dollar versus yen move to the upside. The yen move lower, and in the process here, all for the hourly chart, we are breaking above this ceiling area, which we broke through it before. But if we go back in time and take a look at the high here and the high here and here and here and here, that was a nice ceiling, broke above that level, then fell below that level right through here after trying to hold support, and returned to that level in trading on Friday, only to find willing sellers against a level. And in the Asian session, we found willing sellers against a level. So right now we're trying to break above that level at 155.95, and we're currently trading at 156.06. So the buyers are making a play here. As long as the price remains above 155.95, the technical bias remains more to the upside, despite what the fundamental picture may be saying. Of course, there's two sides to every story, and the Fed is likely to remain on hold for a while. So that may be helping to contribute to the bullish bias here in the dollar versus yen in trading here today. Finally, let's take a look at the sterling versus US dollar, and we'll take a look at the 4-hour chart of this currency pair. And on the 4-hour chart, a couple things that in play. One is this red box that what there's a value area all through this area right through here. We're back into that level after moving above it and trading last week and staying above that level. We also moved above the 100-day moving average in trading last week. That's this blue line right here. If I can get the arrow, that's this blue line right here. So we moved above the 100-day moving average, and it corrected toward the end of the week, came down and found support buyers ahead of that blue line on Thursday and Friday. So that's more bullish. We did move higher into the close, and then we moved up to this swing area. It's just a random level, but we did have two highs right here, and then moved above that level, using that level as support before moving to the upside. We did trade above and below it here, but then reestablished the level as resistance right here and right here. And in trading on Friday, we did come up to it and move a little bit above it as we did in trading here today, but the price has since rotated back below that level. The level comes in at 1.27073, and that's going to be my barometer for the sterling versus US dollar going forward. If the price moves above that level, it's more bullish. If the price stays below, then we could see a rotation back toward the 61.8% retracement over time. We will see that's how this move down from this, actually, a 2024 trading range from the March high to the April low. That's our trading range in that currency pair. So there you have it, a look at 3 of the major currency pairs to start your trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.